Hello, everyone. I hope you're okay. Let's start one of the hot topics of this time. Right, smart money. What are my views about smart money? Smart money basically, uh, what that's how people explain it. I've seen a lot of YouTube videos, and smart money is basically the institutions, banks. The banks are big organizations, people with massive accounts. That's what smart money is. Smart money concept are basically when you analyze the market or the people who use smart money concepts, they think that this is how the banks trade. This is we are sitting in that move because the bank or institutions, big investors, are taking the trade now. So that's SMC, a smart money concept, based on basically. So where it stands in terms of profitability and is the good way of analyzing the market? Well, everybody have the right to analyze the way they want to analyze the market. But the thing is, in the market, there's a lot of scammers and a lot of people, so-called Forex gurus, they use smart money just to get the people, customers, and to basically they don't know much about forex, and they just use smart money as a getting into their trap and make money out of them. That's not everybody is the same. Smart money does really exist. The concept is correct, and it's just a way of looking at the market. So simple as that. So if you are using supply and demand, support and resistance, and you know how the market moves, market structure, that's what it is, basically. That's the market is about. Whether you use Fibonacci or you use a naked eye, doesn't really matter. If you make a profit out of the market, you know how to trade, smart money is nothing. It's just a way of looking at things. Suppose we have to go to London. We can go via train, we can go via aeroplane or whatnot. We can go anyway as long as we reach there. Does is smart money is better in analyzing rather than the normal ways of support and resistance and or supply and demand, which is basically support and resistance areas. So, well, it's you can't say it's better. It's almost same concept, but used interchangeably. It's almost in a sense there's supply and demand, support resistance, smart money concept. In a sense, they're same. So when there's a big supply area, demand area, or in other words, you say strong resistance or strong support, weak support, weak supply area, weak demand area, and weaker, you can say weaker order block. In smart money, they use order block terminology too much. Breakup structure. What is breakup structure? Market is going in a trend within the normally market. Smart money say, oh, we make more profits because some people say smart money you can make more profits. Why? Because they think, oh, we have more risk to reward ratio in smart money. Not really. You can do that with support resistance levels. You can do with the supply and demand levels. And so, as I said earlier, as long as you make profits, whether you smart money, support concept, support and resistance, or supply and demand area, which is really, as I said, support and resistance areas. So it does not really matter. I hope this clears the thing. And they use order block. What are the order blocks? Order blocks are basically supply and demand areas. You don't have to read the smart money concepts to know the order blocks. Order blocks are basically supply and demand areas. So let me share my screen with you. I'll try to explain on the chart. Right. So you see, this is the gold chart. Let me put it in daily. This is supply and this is this support. This is a resistance level, as you can see. This is support level. Some will say, "Oh, this is order block. Market touched this order block and went reverse back." Yeah, fine. It's order block. You don't have to say it order block. You can say it's this is support area. So, or you know, you can use supply and demand terminology instead of order block. So people can say, "Oh, why in smart money? How the smart money will tell you it gonna market will reverse from this area? How? There's no way of telling it. Support resistance can tell you the same thing. Supply and demand can tell you the same thing. So it's just way of looking at the market. As I gave you an example, I give you the other example. So suppose you want to do something. If you want to make a phone call, either you can use your mobile phone, you can use you can make a call using a Skype or any other software, or you can make using a home phone, or if you want to send a message, you can send it by email, via text message. So there's a lot of different ways to do one thing. So that's it. So a lot of things in the market are based on luring the new clients and just impressing the people with new words, new terminology. The basics are same. So in fact, support and resistance is the backbone of the market. If you know support and resistance or supply and demand levels, then you can make good profit as long as your risk reward or management of your account is good. So, for example, look at this. This is a gold chart. We know that this is the bottom of the market here. And this is a weekly candle, bullish candle, and almost no wick here, as you can see. And we could take a buy trade where it's a double bottom as well. The double is making a W as well. And there's a level here. This previous level of structure here. So we can take a risk here. If you go to smaller time frame, you can further analyze it. However, when this candle formed, this weekly candle, you know the market is going. It's a very bullish trend. Market did test this level as well. Or if you, there's another way of looking at it is the W pattern. So these patterns are based on the market structure, basically. So if you know market structure, how the market works, how the market moves, what kind of structures it makes, then it moves, and you know, with the help of candlestick patterns, and you can use Fibonacci level. If you don't have to, you don't have to. You still, you know, golden ratio levels, some Fibonacci levels help you to pinpoint exact price, but you can do without it. So this is how it is. The market works. Basically, it's simple word market structure. So I hope this clears a lot of things for especially for the new people who do not know much about smart money concept or these terminologies. So I would suggest do not go into too much confusion into terminology. It's better you know, but make your primary focus should be support resistance and supply and demand level. There's other words for support and resistance, and how the market moves. Just pay attention on that, and that's it. That's all you need. So you can obviously you have to combine with candlestick patterns and a lot of things you can combine with. Some people combine RSI and but you don't have to. If you are good at the market, you don't even have to use RSI and moving average and blah blah. You don't have to. So I hope this is helpful, and have a good trading. Thank you. Bye bye.